This is episode 2 of the Wealth Vlog. In the first episode, I introduced the vlog and what the purpose was all about, and in this video, I'd like to start talking about money. Before I begin with that, I haven't even introduced myself yet. My name is Ben and I was born in 1985. That means I'm young enough that Back to the Future came out the year that I was born. I was too young to remember the fall of the Berlin Wall, and I can barely remember owning a typewriter. On the other hand, I'm old enough. I had an NES back when the graphics were cool and not just nostalgic. If I wanted to listen to a song that I really liked, I had to listen to the radio until it came on and then hit record on the cassette tape. If I wanted to watch a movie, we had to physically drive to Blockbuster and rent a VHS tape. When I studied at the library, we learned how to use the Dewey Decimal System and an encyclopedia. It also means that I'm old enough to have a wife and 2 kids, a career as a high school teacher that spanned 10 years, a mortgage, 2 businesses, and 15 years of investing experience. So if I created the impression that this was going to be a video where I'm learning to invest for the first time, well, that's just not the case. Most of that stuff that I've mentioned, buying a house, years of investing, is interesting, but it's not here and now. If you'd like to hear some more about my experiences in the past, you should check out my supplement series called Beginnings. This vlog, I want to talk about what's happening this week. But if I could only share one lasting life lesson from my experience so far, it would have to come from my experience as a math teacher. Math is not the study of numbers. It is not the study of procedures. It is the study of problem solving. And when I say problem solving, I don't mean if Jimmy has 3 apples and Susan takes 2. I mean the ability to analyze a situation, identify an objective, recognize restraints and available resources, and then formulate and execute a plan to meet that objective. That is what math is. You don't have to be good with numbers or algebra to be good at math. In fact, if you want to get good at math, play a board game. I'm not talking about games like Monopoly or Taboo. I'm talking about games like Suburbia, Legends of Andor, Shakespeare, Robinson Crusoe, Myrmes, Isle of Skye, Concordia. These games won't teach you algebra or calculus, but they will teach you how to appreciate and enjoy the art of problem solving. That is the #1 skill I bring to the table. Yes, I've had experience trading stock and options and buying real estate and starting a business. In my first video, I said that this was the beginning of a new journey. It may seem like I've already had a bit of a head start. I want to tell you that you don't need a head start. All you need is a head. If you are able to wrestle with a problem and persevere until a solution is found, you are already right there next to me. The objective is to obtain wealth. That means bring in passive income. The restraints are that I only have $2,000 and about $900 coming in every month, which I can use to invest. If you're wondering where that money comes from, it's actually coming from pre-tax income. That's money that I'm setting aside until I potentially have to pay it in April. So while that might sound like a lot of money, I only get to play with it for about 4 months, and I need a really liquid investment. If you're wondering what's happened with all of the money that I've made before today, well, short answer is that's where the real estate and the businesses come from. It took some money to get those things started. I don't think I have time in one video to list all of my available resources, but if I was stranded on a desert island, I would have to learn how to see everything as an available resource. Similarly, in investing, everything is a resource. In this video, I'll be showing you how to use some of those resources to invest in mutual funds. Well, at least mutual funds was originally what I wanted to talk about in this video, and then some things happened at the end of the week that kind of threw off my plans. Now, when I start talking about Wall Street and what looks good and what's smart and not smart, I should probably offer the big disclaimer that everything I draw from is personal experience. I don't have a degree in finance. I was not employed at some investing firm. I have my own personal worldviews and my own personal experience that I draw from, and there are a lot out there. Do not take me as an authority. Take me as a guy who is just playing the investing game. Yesterday, I found out that we bombed a general in Iran, and then Wall Street responded in a really kind of strange way. Wall Street's been behaving really strangely lately. We impeached President Trump, and then the next day, stocks went up. So that, to me, looks irrational. The question is, how do I respond to that? Sometimes I feel like I'm a little out of my depth. Like I go online and I read these articles and now I'm like blown away with like what are the implications of an attack on Iran? And does that mean that there's a war headed? And how should investors respond? And what do other nations think of us? And what is the, gosh, last night I was reading about the history of United States and Iran relations. Like there's a lot of material to read and it's a little overwhelming. So right now, let's take a look at mutual funds. So if you don't already know what is a mutual fund, to explain this, I will use a very simplified example. Let's suppose I claim that I'm an expert example, and I go around telling all of my friends, hey, are you interested in investing? Because I've been doing this for a long time, and if you want to invest, give your money to me. I will invest it for you. And my friends go, oh, well, yeah, you have a lot more experience here. Why don't you take some of my money and invest it for me? So I might say, okay, tell you what, for those of you friends who are worried about risk, I'm going to put that money into a safer fund, and we'll take some less riskier investments. For those of you who want to have a higher risk tolerance, we'll put that into another fund and we'll do some higher risk investments over there. So I've got a few different funds, even though I might represent like one company. I will show you what I mean. I always use Yahoo Finance. So let's suppose I'm interested in a mutual fund as an example. So we look at this one, the America Mutual Fund Class A shares. If you go over into details, one of the first things it'll say is what kind of fund it is. So we can see the category here is large value, and the fund family is American funds. Up above, I have the top holdings. This is where you can see what kinds of stock this mutual fund is investing in. The very first one being Microsoft Corporation and Verizon, and so on. The nice thing about this is the mutual fund is handled by professional investors. The thing that turns me off to a mutual fund is, why would I give my money to a professional investor to invest in these stocks for me when all of the information of what they're using is available online? Why not, in a sense, pick and choose your favorite funds out of that mutual fund? That approach is a lot more hands-on. You will be able to see where your money is growing and where it's struggling. If you buy the mutual fund, you can only see the value of your money as it reflects by the entire value of the mutual fund. It's a simpler approach, and you learn a lot less. In fact, there's even more information available than that. If you go into Microsoft Corporation, so MSFT, so this is the part of the video where in real time I try to describe my thought process as I look at the data on Yahoo Finance. And what happens is I get a little too excited about the data and I start to get a little too technical, and that's not the point of this video. Instead, what I'd like to do is summarize some of the major important points about mutual funds. First, when you invest in a mutual fund, you're giving your money for somebody else to invest and for somebody else to think for you. Secondly, you might be able to earn more, and you'll definitely learn more if you think for yourself. Thirdly, you can look at the mutual fund as a model portfolio and as a piece of inspiration from which you can do your own research and pick and choose the stocks that better reflect your values and the things that you think are going to do well. You'll be able to see how each one performs individually, and you'll be able to get a better perspective on how your portfolio is building wealth. In this example, what I end up doing is going down a bit of a rabbit hole, and I end up researching more and more stocks, which connects me to other things. And so ultimately what comes out is a totally new decision that's not at all related to mutual funds, but this is what I did, so I summarize it here. So this is what I did. In preparation for this video, I started looking at mutual funds. In one of the lists of assets for a particular mutual fund, I came across Qualcomm's name. I then looked up the statistics. So then I went to the Qualcomm website and started reading about 5G technology. I went deeper into the rabbit hole at that point. I started reading about what 5G technology is. I then Googled who are the leaders in 5G technology, and I found a list of like 5 or 7 more companies. So I looked up the statistics on each one of those. Finally arrived at Xilinx, which has the ticker symbol XLNX, and this one, boy, this is a tough one to say. It's like Swedish, I think. Telefonaktiebolaget. Boy. Ericsson, ticker symbol ERIC. I read into some of the statistics about that. Anyway, the things that I found about them really appealed to me in my little portfolio right now. I currently have Caterpillar stock, Qualcomm stock, and Eric stock. If I'm honest, I don't really look at mutual funds or their asset composition anymore. I found some other resources that I use to make my own choices, but I do think that it can be an excellent starting point and an example for somebody who's new to get into it and find a way to pick and choose their own portfolio. The big thing is when you invest in a mutual fund, you're putting your money for somebody else to think for you, but you can earn more and, more importantly, learn more when you invest for yourself. It's that experience of building your own portfolio that's going to give you the confidence and the know-how to do other things. When I try to explain things, I try not to be too technical and I try to just speak from my experience. In doing so, I'm not always the most authoritative in my explanations, and I might even lack the kind of accuracy that some of my viewers might wish to see. If you have questions about some of the things that I've explained, or even better, if you have a correction about something that I explained improperly, put it in the comments. Also, if you have any ideas about what to do concerning the current situation with Iran and where money should go, write that in the comments as well. I'm still looking for ideas. If you're interested in hearing what's next for me, subscribe to my channel. If you'd like to find out more about what happened before I started this series, check out the supplement series Beginnings, where I talk about how I started investing when I was a teacher and how I later bought a house and started some companies. Lastly, if you want to follow me, I'm on Twitter at NeverBeenBetter, and I also have a blog, neverbeenbetter.com. Thanks for watching.